Hello, this is Avram from OTT Markets. We're going to review the US personal income and spending data, and then we can check the market reaction. As always, let's check the data. So core PCE price index, before going forward, I have to tell you that when the Federal Reserve talking about the inflation, this is the preferred inflation number of Federal Reserve, the core PCE price index in monthly and annual scale. That's what we have to know at the beginning. So the core PCE price index in the monthly scale increased only 0.1% compared to 0.2% expectations and previous month. On the annual scale, it increased 2.7% as it was expected, slowly higher than the previous month, which we had 2.6% in July. With these numbers, the headline of PCE price index increased only 2.2%, less than 2.3% expected, market expectations, but much lower than 2.5% in July. And on the monthly scale, it increased only 0.1%, lower than 0.2% expectations. At the same time, the incomes and spendings also slower. The income increased only 0.2%, much lower than 0.4% expectations, and slowly less than 0.3% in July, while the spending also is cut more than half, down from 0.5% to 0.2%. That shows that the US citizens right now, they have less income and they're spending less money, less than expected, less than previous months. So the economic condition is not that good, but it can say that. I mean, we can generally say that, okay, we have less income. When we have a less income, it means that the people, when the people that have less income, the consumers, they will spend less as they have less money. So when they spend less, it means that the demand is lowering, so the inflation can be more under control. So these numbers, generally, they tell that the inflation already is down, and with lower income and spending, the people that with the lower income and spending that people had, we can expect that the interest rate, inflation rate to stay lower. What that will mean for the stock markets. That means, but generally for the financial market, that means that, let's check this chart, and while we are checking the chart, we can explain more. When we have a less inflation under control, it means that the Federal Reserve was somehow correct about the lowering their rates by 50 basis points. It can say that, despite what I was thinking. Generally, the data says that inflation is under control, and it's going to be under control, it's going to lower more, but at the same time, we have to be a little bit worried about the future of the economy, because the income and spending are low. So it means that the economy is not going to increase so fast and so good. So generally, while this that, but at the same time, this data means that the Federal Reserve can continue its dovish policies and can continue cutting the rates in the next meetings. So these data will support generally the lower interest rates. Lower interest rate means more investment in the stock market. So generally, we can say that these numbers and this data can be positive for the stock markets, but at the same time, it can put more pressure on US dollar, how it was, and we can see the US dollar under 100 mark, which is happened for the first time in years. So generally, what we can say right now is that for now, we can expect more pressure on US dollar index, because stock markets and generally the financial markets, they are counting on more dovish Federal Reserve. And with more dovish Federal Reserve, we can expect the stock market to behave a little bit better. Do not forget that yesterday we had a GDP numbers, and the GDP numbers, the data confirmed that the US GDP increased by 0.3% in previous quarter, which is a very positive number, and we can expect that, okay, these numbers means that the economy is fine, the economic growth is fine. So while the inflation is under control, we are going to have the lower interest rates, and GDP is fine. So generally, we can be positive about the future of economy, and we can avoid the recession or any even the soft landing, which is the positive news for the stock market. But at the same time, do not forget that with the lower income and lower spending, this positive can be softer. So generally, we can have a softer uptrend in the stock markets, not just on the S&P 500, across the markets. On the gold front, if we check the gold market, yeah, we have a little bit weaker US dollar. This weaker US dollar can generally help the stock, can generally help the gold price. So as you know, they have an opposite relation. So with the cheaper US dollar, we can have a more expensive gold. But at the same time, these numbers and these data are the positive for the stock markets, which means that stock market can get benefits, and we will have less interest to invest the money in the gold market. So these numbers cannot be so much positive for the gold markets, but can be positive, but not much. But can be positive, not much for the stock markets, can be negative for US dollar. On the oil front and energy front, as the US dollar, as the stock market increase, that can be a positive news for the energy market as well, which means the positive news for oil too. So that's what it is. This is generally what's happening in the market and what was the market reaction. So if you had any other question, please do not hesitate to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye.